Hey everyone, welcome back to Corporate Decoder, the place where we dive into the world of business filings so you don't have to, and let's be honest, we'll try to make it interesting. Even when, like this 10K, it might seem like reading the fine print on a tax form. Today we're decoding ProKidney's 10K annual report, focusing on their financial strategies. ProKidney is a clinical stage biotech firm aiming to shake up how we treat chronic kidney disease, or CKD. They're not about managing kidney failure, but preserving kidney function instead with their lead drug Ranasil. This report covers the fiscal year ending December 31, 2024. The company estimates the market value of their stock held by non-company 26 million dianas. Scroll this factor scroll, but before we get too excited, remember that every biotech company has its share of risks. These risks range from their ability to actually make a profit, something they haven't done yet, to the success of their clinical trials. ProKidney's main strategy is to get regulatory approval and successfully sell Ranasil, which is initially for patients with CKD and diabetes. They are also focused on maintaining their expertise in manufacturing these products and using their knowledge to come up with additional products for kidney disease. Now onto kidney disease and their treatment. We are talking about a chronic condition where you slowly lose kidney function and often have other health issues with it like diabetes. Ranasil is designed to try to stabilize or improve kidney function, potentially delaying the need for dialysis or transplantation. The company completed a phase 1 trial with generally okay results, but are not pursuing it further at this time. Their focus is now on the phase 3 OGENE-006 trial that has been reviewed by the FDA. If it's successful, they believe Ranasil could get approved quicker, using the eGFR slope as a surrogate endpoint. They even stopped another trial, OGENE-0116, to really focus on getting Ranasil approved. They face a lot of competition that are safer, more effective, or cheaper. In a surprising turn, Ozempic has been approved for reducing the risk of kidney disease worsening in adults with type 2 diabetes and CKD. They ran into some manufacturing issues with getting approval from European regulators, but it sounds like they worked that out. The company has patents filed relating to their techniques, but some of their earliest patents are expected to expire as soon as 2029. They received an RMAT designation, which is an advanced therapy designation by the FDA. But the process for this type of drug and the length of approval is not clear. A new amendment requires the company to submit a diversity action plan for their clinical trials, which can delay things further. Even if the drug is approved, they will need to continue to monitor the drug. If approved, it will be up to the Centers for Medicare and Medicaid Services and private insurers to provide coverage for the treatment. But also, like Ozempic, off-label use of the drug can be an issue. Many companies like ProKidney have agreements with individuals that are involved in the research. This may cause conflicts of interest. They also have to continue to monitor the drug for years after release. The FDA can require a diversity action plan in all clinical trials, which may affect the timing. Global and local governments are increasing the ways they're regulating data, which could really change how ProKidney can market and grow. Medicare and Medicaid have high expenses from kidney disease, so price controls could lower the amount they get paid for the product. Key components of their business strategy is to get regulatory approval for and successfully commercialize their product, Ranasil, to maintain and refine their internal expertise in manufacturing, and also discover and develop additional product candidates for the treatment of kidney diseases. Their financial statements present fairly in all material respects the financial position of the company in conformity with US generally accepted accounting principles. Alright, let's see some numbers for the year 2024. They had $76,000 in revenue from operations. Total operating expenses, however, were $183 million. That's quite a difference. This led to a net loss of about $163 million before accounting for non-controlling interest. What's interesting to note here is that under the REGEN-008 master protocol, this is intended to follow study participants previously treated with the cryopreserved formulation of Ranasil, and participants will be followed up with for a period of 5 years. The filing mentions that as of June 30, 2024, the aggregate market value was about $232 million. As of December 31, 2024, they had about $99 million cash and cash equivalents and another $259 million in marketable securities. It is claimed that since the company is a smaller reporting company, they don't have to provide quantitative and qualitative disclosures about market risk. Their auditor is Ernst & Young LT of Raleigh, North Carolina, which has been the company's auditor since 2019. Essentially, the company hasn't proven that they can successfully turn their research into something that makes money, and they may never become profitable. Additionally, the Rilparencel product has been known to cause serious adverse events. ProKidney depends on their partnerships to help with development and funding. Interestingly enough, under item 9B, there is a statement declaring that during the quarter ended December 31, 2024, none of the company's directors or officers adopted or terminated a Rule 10b5-1 trading arrangement, or 10b5-1 trading arrangement, or non-rule 10b5-1 trading arrangement, or non-rule 10b5-1 trading arrangement, or non-rule 10b5-1 trading arrangement. If the registrant has elected not to use the extended transition period for complying with any new or revised financial accounting standards provided pursuant to Section 13AN of the Exchange Act. Okay, having looked at all this data, ProKidney is in a high-risk, high-reward situation. They're betting big on Rilparencel, and the road ahead is filled with regulatory and competitive challenges. There's a lot of uncertainty about whether Rilparencel will get approved, and even if it does, if there are other companies in the same markets, the competition is already intense. Despite these risks, the potential payoff in preserving kidney function is huge, and they have a few key things going for them, like RMAT designation and an experienced team. For investors, it's all about weighing the odds of success against the company's ability to manage its cash burn and execute its strategy. The company needs to make sure that there will be a lot of new potential for patients. Thanks for watching. If you found this breakdown helpful, hit that like button, leave a comment, and subscribe for more corporate decoder content. Until next time.